Hi, Jason Paff, thedutchbook.com. Wanted to preview this week's market action. As we look forward to this week, it really is almost a kind of Super Bowl type week for traders. There's so much going on, so many opportunities. We'll talk about how to take advantage of some of these opportunities in a bit. But first, just wanted to clip through real quick and set the table. This week's so busy, it's already started in the sense we have the G7 summit, as most of you are aware. Lots of talk about trade, lots of talk about trade imbalances, trade deficits, trade policies, and certainly tariffs, as the United States went forward with announcing tariffs on many allies and trusted partners. Those folks obviously have the ability to reciprocate with their own tariffs, and talk of at least a trade skirmish, if not trade war, has certainly erupted. G7 going on this weekend. We've got a chart of the DXY index, the dollar measured against a basket of currencies. Expect some action here this week. Certainly we'll be back and forth. We actually don't expect a lot of movement off the G7 itself, given that headlines will probably be pretty mild for the most part, and any type of discord between the United States and folks like Canada has already been generally priced in. We don't see that getting worse. But there's a lot of action through the rest of the week for the dollar to move. We have the Trump-Kim summit at the first part of the week. President Trump is actually leaving the G7 early to get to the Trump-Kim summit. Again, there's been a lot of back and forth leading into this. We don't expect a lot of negative news flow coming out of this summit. Anything can happen. Two very unpredictable world leaders getting together. But in terms of the dollar, we don't expect sharp moves from either the G7 or the Trump-Kim summit. But more than anything, it'll be entertaining to watch. Will be interesting to see what happens. As always, when we talk about geopolitical risk, gold, one of the most popular, historically speaking, at least safe havens, although it's been taking a nap lately. We don't expect a lot of movement around gold either, unless something really bad and really unexpected would happen either at Trump-Kim or the G7. Longer term, we do see some opportunity for gold through 2018, but with respect to this week, with FOMC later in the week, obviously gold is less attractive in a world where U.S. rates are rising, given the opportunity cost of holding a non-yielding asset. So there really could be a lid on gold this week. Expect the current level, maybe a mild downtrend, moving sideways through the week. Taking a real quick look at oil. No massive event risk with respect to oil, except for the current narratives. We wrote about this last week on the market news section at nadex.com. Supply is raging out of control. We see a lot of what we would call channel stuffing with respect to producers producing and refining a ton of gasoline, storing it, trying to put it into the marketplace. Gasoline inventories are building. Oil inventories last week were reported as building. We don't see that slowing down. If anything, it's heating up. OPEC through this year will be raising their production caps. U.S. producers continue to produce. They can continue to make a lot of money in the mid-60s. We really see supply continuing to rage as the EIA reports middle part of this week on inventories in both gas and oil. We expect a mild build in both again this week, on the back half of last week reporting a build. That could be very bearish for oil, seeing that 2 weeks in a row. We could see a level around 63, 63.25 for oil as we exit this week. With respect to the pound, some of this action will be driven by the dollar. Again, we have FOMC on Wednesday, but we've also got the UK CPI on Wednesday. We expect more very soft data coming from Great Britain. Could be another down week for the pound. We've seen some mild corrective movement up since the end of May, but there really could be a lid on that if you see a sharp move higher from the dollar, given the events this week and more weak data out of the UK. On Tuesday, we also have Chinese GDP. In a week like this, it'll be hard for that to rise to the top of news and analysis, but Chinese GDP, always consequential. It's been pretty choppy with respect to growth this year. Globally, China obviously is a driver of that, given their normal output. We expect continued moderate expansion in line with their forecasts, the high 6% range for China. ECB, a lot of talk about the ECB on Thursday. They could be rolling back, winding down their QE program, which could be structurally supportive, certainly for the euro. You see a pretty tight range. The euro has been bouncing between lots of tops around the 124 to 125 range. We've pivoted off of 115, and we're up into around a 118 handle, 117.6 currently. The euro is going to need two things to move back into the mid 120s. One is a wind down finally of the QE program. The second is stronger data. They're not going to get stronger data this week, but the wind down of the QE program or language around that could be structurally supportive of the euro. We also have BOJ on deck this week on Thursday. Don't expect any rate increases there, and probably don't expect any in my lifetime. But the yen could be driven this week by events elsewhere in the world. Another popular safe haven. Do not expect any rate increase, but Japanese data has been relatively good this year compared to prior years. If we have some solid data, if we have some positive outlook type language from the BOJ this week, there's global risk elsewhere. Clearly, the yen is typically a safe haven. If Japan shows some strength this week and the rest of the world is in some form of volatility or disarray, could be a strong week for the yen. Not a lot of conviction around this, given the yen will be driven by other events, and it's hard to see exactly how all of those will tie together to impact the yen. But expect volatility, expect swings, and if you have some options, in a short-dated options market, you can certainly play those swings pretty effectively this week, as we expect a lot of back and forth. It's going to be a fun week. Lastly, crypto. We recalibrated our 2018 forecast this week. We expect much more bullish conditions for crypto than we've seen in the first half of 2018. It's been very bearish, a lot of downward pressure, but this support level through the low 7,000s is held. We see a recovery off that now, some mild organic expansion in terms of wallet creation, unique users, transaction volume, and we expect that to increase demand in a very stable, organic way through the back half of 2018. For June, if maybe you're playing a monthly spread, trading a monthly spread on nadex.com and Bitcoin, we see a level of around 8,000 as we exit June, and our point forecast for 2018 is by the end of the year a level of around 11,300. Again, my name is Jason Paff from thedutchbook.com. We publish regularly on the market news section of nadex.com, which incidentally, as we have so much volatility and so many trading opportunities this week, it's a great platform to check out. If you're not familiar, you can get a free demo account in minutes. And you can trade these markets a variety of ways in a capped limited risk environment. So check that out at nadex.com. Check out our content on the market news section. And more than anything, have some fun, and we hope you have some luck this week as you enjoy what we're calling a Super Bowl type week for traders. Good luck.